What's up, guys? Welcome back to DCA. So the price of Bitcoin has been hanging right around 23K. We've been stuck here for, not too long, but about a week at this point. And a lot of people have been talking about the fact that once we get to 25K, we may experience a lot of resistance at that level. I think there's a fair reason to believe that. If you just look at these charts here, we hit that 25K mark back here in August, and that's where we found a lot of resistance. We've also used that level right at that 25K point as an area of support. That was back in May. And you'll remember that back in May, that's kind of centered around the Luna event. So when the price came crashing down, we went from around 40K down to around 25K. That 25K mark is where we found support at. And as we all know, support levels, when you lose them, they tend to turn into resistance levels. All right. So today I want to analyze that, and I want to look whether that argument has any teeth, or whether 25K is very likely going to be a level that we explode right through. So what we're going to do today is primarily focus kind of on this region right here. We're going to look from around 40K all the way down to 12K, 15K, that kind of zone, because we want to know over the coming weeks, over the coming months, and let's assume that Bitcoin's not dead, which I don't think anyone here watching this believes. Let's assume that the rally will come back at some point. The bull market will return at some point, and we want to know what's going to happen with the price action when the rally finally does get kicked off again. So if you guys are new here, what we do on this channel is data-driven analysis of the cryptocurrency market. We create mathematical models for analyzing these markets, and we dive into the numbers of the data. So in today's example, we're not going to be looking at a particular model. We're going to really be diving into the numbers in order to understand how and why price action works in this crypto market. On aggregate, we can analyze the market and understand how investors react to different situations and what's likely to happen based on the distribution of holders of Bitcoin. And the reason, and I'll say it again, I say it often, but we look at Bitcoin and not all of these other altcoins. It's not because we necessarily care the most about Bitcoin. It's because understanding Bitcoin, quite frankly, helps you understand the entire market, because Bitcoin trades the most volume. It's representative of the entire crypto market. We understand Bitcoin better than any other asset. In addition to the fact that there are more metrics existing for Bitcoin, there's more on-chain data. We have a longer price history, which allows us to create better and more robust models, because when we understand Bitcoin, we can understand the altcoin market at the same time. Okay, guys, so we're going to start with this chart here. Let's assume that this rally were to continue, and let's say that we did get up to 25K. Does it make sense to say that 25K in particular is an area of resistance for us? We're talking about this zone right in here. Does it make sense to say 25K is a huge resistance zone for us? And let me explain what we're looking at here. We have the Bitcoin distribution, and what I mean by Bitcoin distribution is we're looking at different prices here, right? So let's just pick an easy price. So let's say 16K. All you need to do is look at 16K, and these are showing you actually how many Bitcoin are owned at each one of those levels. For instance, at 16K, you can see that, I have it marked out here, 0.4 million, 0.8 million, 1.2 million. So right at around the 16K zone, 16.5 we'll call it, there are around 150 to 200,000 Bitcoin held there. All right. If you come up here to right here at around the 17.5 level, you'll notice there are actually around 1.3 million Bitcoin at that level. So there's a huge number of Bitcoin being held right in this 16, 17 up to around 18, and then all the way up here till around 24K. In that zone, there are a massive number of Bitcoin. Now, not all Bitcoin are created equal, though, as we know. The daily volume distribution of Bitcoin that's traded is actually primarily short-term trading. So when we say that not all coins are created equal, what exactly do we mean by that? Well, notice that these colors here correspond to an age of the coin. So we have these 4-year coins, we have these 2 to 3-year coins. These older coins, these are going to typically create huge levels of support for us. And why is that? And that's because if you're someone who's been sitting on Bitcoin for 4 years at this point, or even 2 to 3 years, and it comes down to your price level, what we've identified is that these people are much more likely to hold at that level and to perhaps even buy more at that particular level. These people are much less likely statistically to sell than a shorter term holder. So in other words, these guys right in here, these 4+, 2 to 3 year, and even the 1 to 2 year guys, but really these guys here are much less likely to sell. And in fact, what has been found is the longer that someone holds, the more likely it is that they're to continue to hold, even as it comes down to their price level. Because if you've held for 4+ years at this point, if you've held for 2 or 3 years, you've demonstrated long-term conviction. And essentially, these people become less and less likely to sell the longer that they hold. Now, these 1 to 2 year, they're sort of an intermediate case, but still they tend to represent people that are more likely to hold. And you'll notice that they are kind of distributed up here. So let's look at where we're at right now then. So we're sitting at 23K and we've been spending our time mostly anywhere from 17K up to right where we're at right now, 23K. So if we just look at where we've been over the last 6 months or so, it's kind of been right in this range. And that's why you see this huge number of coins here. Now, I have removed the less than 1 week holders, and that's because they make up the vast majority at any given price that you're at. So if you looked at 23K, there's a huge number of short-term traders at 23K. If we went up to 24K, there'd be a huge number of 24K holders. All right. So I've eliminated those because quite frankly, they're inconsequential. The short-term guys, they're going to be in and out on the same day over and over and over again. And we see this repeatedly at every single price that we're at. But what we found is when we were back here at 17K down at these lows, you saw a huge number of coins picked up, right? And these are these 1 week to 6 month coins. So someone decided to come in and they really started to acquire down here in this range. Now, if these people continue to hold from here, and I can assure you that not all of them will. We'll see a lot of selling. This number will continue to shrink, but it's a strong indication that someone believed that right at that 17K level, that 17.5K level, that was a good place to acquire a significant amount of Bitcoin because we saw the price kind of take off right from this level. And what we've been experiencing now is as we're coming back up into some of these higher prices, some of these guys who have held for 6 months to 1 year have kind of been selling. They're kind of acting as resistance. And that's because when people get down a significant amount on their investment, they become happy just to get out of the asset because they've been thinking this whole time that the asset's going down to 12K or whatever number that they have in their mind. And they will be happy to exit the asset at their cost basis. And when I'm telling you that this is happening, this isn't my opinion. This is a fact. We can look at these numbers, and I do look at these numbers every single day, and we've seen these numbers coming down. These guys who have been holding in the 6 month to 1 year zone have been selling. Not a ton of them, but that's why we kind of can't break above this 23K zone. It's because some of these shorter term holders that you're looking at in yellow and in green, they have been selling. The yellow people taking profits, and the people in green, some of them taking profits, but others are closing out their position at their cost basis because, they believe that the macro picture still may hold a significant drop in the price of Bitcoin for us, or that regulatory pressure could create a significant drop. Okay, so that kind of lays out everything that we need to know. We know that these guys, these longer term pink and orange guys, they create support. These guys tend to create resistance. And with the 1 to 2 year guys, they could go either way. It's not until they prove that they're going to, stick around for the long run when we come back up to their price. Are they going to sell or are they going to keep holding for profit? What I want to look at today then is let's look at this zone above us. And I want to show you why I believe that, when this rally comes back, I think that the price is going to move up and it's going to move faster than anyone's expecting. And I'm going to show you why that is. And I'm not saying that that has to happen right now, because quite frankly, I don't know when it's going to happen. It could happen right now. It could happen tomorrow. It could happen a year from now. But when things do get kicked off again, I think we're going to see the price move up into higher ranges much faster than anyone is expecting. So when people are saying that there's a significant resistance at 25K, I can't tell you definitively that they're wrong because quite frankly, we just don't know. But let's look at the data. Now, when we look at the holders at 25K, or let's look right above us. So we know we're sitting at 23K. So there's maybe around 600,000 coins kind of lumped up right in this 24.5 level down to around 23K level. So there is a fair amount of possible resistance kind of sitting right where we're at right now. But when we get above us, when we get above this 24.5 level, let's look and see what happens there. Well, above this 24.5, there's nothing. There is no resistance whatsoever up to around 20, 27.5K. And then all that there really is above that are these 27.5 level. And those are long-term holders, all of them. All of the people holding right here have been holding for 2 to 3 years. No consequential amount of short-term holders are in this zone. It's not until we get up all the way to around 29K where you barely encounter any significant resistance. Okay. So up from 24, around 24.5, if we're able to break above that level and there's some positive news in the market, I think you're going to see the price explode through this level, explode through 25K all the way up to around 30K. Then we start to experience, maybe 150,000 coins plus these adjacent shorter term holders, totaling maybe around 250,000 coins. I think you could see us explode right through that level as well, because that's just not a significant amount of resistance. Look at every other level around here. Look at below us. There's a huge number of coins. Look at where we're at. There's a huge number of coins. Above us to 29K, there's almost nothing. And above that at 30K, again, there's almost nothing all the way up until you start to get to around 40K. And realistically, I don't have it included on this particular chart, but even above that 40K level, there simply isn't a huge amount of resistance there. And even the people that are holding at those levels have become long-term holders at this point. Now, a lot of these people will be happy just to get out, because they've been, imagine if you bought at 50K and the price dropped all the way down to 16K. A lot of times what we see in those situations is those people will sell right when it gets back to their cost basis, or they'll at least sell some of their Bitcoin just because of the fact that they were down so much and now they're back at even, and it just feels great to get back to that level. And you always have that thing in your mind that we could come crashing back down like we did back here in 2019. It got all the way up to around 13K and then ended up crashing down to 3K less than a year later. So what I'm getting at is, from where we're at right now up until 30K, I think there's essentially clear skies. Then at 30K, we have a bit of resistance. And then really from 31K or so, all the way up until you get into around the 37.5, 38K, there's really, again, not much. So when this market gets kicked off again, when the economic news aligns with the crypto market, I think you're rapidly going to see the price heading back up towards that 40K level. And then once you break above that level, yet again, there's almost no resistance, because we found that over time, most of those people that bought in at those levels have capitulated at this point. So there's a small number of coins above us, which is a great sign for when this market does make a turnaround. With that said, I do want to talk about a few things. So when we say there's no resistance at 25K, well, do remember that the physical resistance from people owning coins is not the only kind of resistance. In fact, psychological resistance, people hitting a price level and saying essentially, that's enough. Like, I suspect 100K will probably be such a number. When we hit 100K, you'll probably see a lot of selling. The rally may continue above it, but when Bitcoin eventually does hit that number, I think you'll see people say, we've gone up so far, so fast, it's time to get out. You saw that with the 20K level back in 2018. It hit 20K and people were like, okay, it didn't quite hit 20K, but people started to front run it in the 19Ks. So 25K could potentially represent a level like that. And the psychological levels do tend to be impactful, but they tend to be more impactful at times when there's kind of a euphoria around. So you have dumb money flowing in right at a round number like 20K or 25K, 100K, I think will be another example of that, like I said. And when you kind of hit those numbers, you see that some of the people who've been holding that are massively in profit, they'll start to take profit, because it will be the same thing for them. They'll say, hey, we're at 20K, we're at 25K now. I've been holding since 16K, or, I bought in down here at 19K. The market's terrible right now. So I'm happy to take my 33.6% profit from where I bought down here at around 19K. You do have stuff like that. So I don't want to sit here and tell you that just because we get up to 25K and there's no physical resistance there. Because remember, all of these short term holders, these guys, these 1 to 6 week guys, these 6 month to 1 year guys, as we're getting up into these levels, some of them, and I would even venture to say a large number of them, will give in to those psychological levels, because I can assure you these are not all long-term holders. So these coins that we accumulate at each new level down will continue to act as resistance even on the way up. But overall, what you don't want to be doing is coming from down to up into a huge resistance area, because as we've shown many times on this channel over the last year and a half, when you're coming from down to up into a large resistance zone, 48K was a perfect example. I was making videos as we were rallying saying that we need to be careful here, because right once we get up to 47, 48K, there's a lot of resistance there. And you're very likely going to see these people happy to get out of their trade at even. Okay, we're talking about right here back in March. And we were probably making the video once we were down at 42, whatever. And we were talking about this level because all these people bought right in here, right? So we were saying that, you know, you had all these people buying right in this zone back here in December, buying in January, as people are telling them that, hey, the bull market is still on. Don't worry. This is just a short correction before we take off to 100K, before we take off to 75K, 100K. And I was making videos talking about the supply distribution, the same video we're making right now, by the way, saying that, guys, look, you need to take a step back and consider the fact we are coming from a huge sell-off all the way down to 35K from 68K, 69K. We have rallied at this point, you know, because we were up here somewhere. We were up 25%, maybe even more from the bottom. From the bottom, we were up around 30%, similar to our situation now. And there was a huge amount of resistance here, right in from this zone. People that had bought back here at 50K nearly, and they were down all the way to 33, 34, 35K. And so when we came back up to that 48K, I said, guys, be careful. This level is a danger zone. And sure enough, what happened? We hit that zone and boom, the price over the next, you know, couple months from 48K all the way down to 17K. All right. So that's kind of what people were expecting right here at this 24, 25K zone. So the 24K, sure, there are a few coins there, a few short-term holders, but not many. And then if you just look, it's clear skies, because not many people had time to buy in this zone right here. And that's why you see that this zone is just completely open for the price to just kind of enter this vacuum and just go nuts through there all the way up. Even past here, once you get past that 30K zone, again, you kind of have another vacuum here. And that's what we're trying to show you here, but we're trying to show it with actual data. It's not, you know, my guess. It's not my estimation. It's what the on-chain information is actually telling us. So overall, what we're saying is, on the upside, when this market starts to take off, we're going to, you know, just go flying through a lot of these levels, I have a feeling. And I think we're quickly going to find ourselves back up at 40K when the market rallies. The other thing you need to consider, and if we just quickly look at this last thing, when we look at this market here, you know, we have broken above, this is the NASDAQ here. I like to look at the NASDAQ because it's very correlated to the crypto market. A lot of people look at the S&P, but we've broken above this downwards trend that we've been in ever since back here in December, maybe even November. Okay, so we've broken above this, but let's not sit here and pretend like the stock market hasn't broken above these trend lines before. You know, we have seen in epic fashion how, like, when the stock market breaks above one of these trend lines, and remember, we're looking at a weekly time frame here. So we broke above this trend line. Well, that didn't mean anything, because where were we a short time later? And, you know, so going from all the way up here at around 1700 all the way down to around 800, another 50% drop. So don't fall in love with this stock market trend. I'm not saying that, you know, this is necessarily what's going to happen. You know, the market is very up in the air right now. I think we're going to have a lot of information about what's happening over the next 3 to 6 months. Okay, specifically this first quarter, I think could be very interesting. So we'll have to see how it all plays out. I would be extremely cautious with getting caught up in the short term trends that are playing out right now. Because, like I said, there's a lot to be hopeful about, but there's also a lot that could go sideways really quickly and see us come crashing down to some of these lower levels. Okay, so we could quickly see ourselves back in some of these lower levels. I remain hopeful, but I remain cautious. And with that said, guys, until next time, as usual, see you.